The Australian Financial Review.
Hi, James. Thanks for coming on the podcast.
Hi there, Lisa. Good to be here. Before we get going, can I just show you something cool?
Sure.
Have you got your MacBook there?
I do.
Open up your Launchpad
Yep.
and type in terminal, and I'm going to send you a file address that you're going to need to paste in there.
Okay, terminal.
This is going to open up a secret document that is hidden deep inside the recesses of your computer's hard drive.
Where are you taking me, James?
Oh, you'll see in just a moment.
Oh, yeah. So it's a document, Bitcoin, a peer-to-peer electronic cash system.
The original Bitcoin white paper, Lisa.
Wow.
For 4 years, that was hidden inside MacBook software.
Oh, you're kidding. That's it.
I could only presume, Lisa, that an engineer working in Apple has hidden that link inside the operating system so people like us would be able to find it.
$100,000 Bitcoin. Today we're celebrating.
Gosh darn it, guys, it happened.
Last week, the price of a single Bitcoin rose to six figures for the first time. It's a remarkable milestone for an asset that was once written off as an experiment. Early investors have become millionaires many times over.
If you'd bought $100 a Bitcoin when Coinbase was founded in June 2012, that would be worth $1.5 million today. But if you kept that same $100 in the bank, you'd only be able to purchase about $73 worth of goods today.
While there have been huge windfalls, it's been a rollercoaster ride. Just 2 years ago, the price of Bitcoin plummeted after the collapse of the prominent crypto exchange, FTX, and the jailing of its chief executive. But the industry's fortunes turned around this year when regulations changed to allow retail investors easier access. And now Donald Trump is on board.
This afternoon, I'm laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world, and we'll get it done.
Welcome to The Fin. I'm Lisa Murray. Today, senior reporter James Ayres on why Donald Trump is a crypto bro, whether Bitcoin's price will stay at these record levels, and how regulators are playing catch-up. It's Thursday, December 12th. So last week it finally happened. After months of people speculating about it, Bitcoin broke through the US $100,000 mark. It's a big milestone. Explain to us why Bitcoin is surging to new records.
Yeah, almost 16 years since Bitcoin was created. As you said, the largest cryptocurrency reached a historical milestone, breaking through that $100,000 per coin mark. Now, all the Bitcoins currently worth $2 trillion US, and in Australia they're worth over $150,000 a coin. Now, over the last calendar year, that price is up almost 130%. To put that into perspective, Lisa, one Bitcoin is now worth more than a kilogram bar of gold.
Wow.
In over its first 7 years, Bitcoin traded under $1,000 a coin. And for its first few years, it was just a fraction of a cent. The first transaction in Bitcoin, which actually was designed to facilitate payments, was in 2010 when it was used to buy 2 pizzas. Now, he paid for those pizzas with 10,000 Bitcoins, which at the time represented $41. But at current prices, that's just around $1 billion US. So
very expensive pizza.
Indeed, they were. Bitcoin is crypto's highest valued coin, but it's no outlier, and there's actually an entire crypto market underneath it, from mainstays like Ethereum to a whole heap of meme stocks, representing from a Thai pygmy hippopotamus and a cartoon dog. All these things have exploded in value since the presidential election in November. Ethereum is up 50% in the last 5 weeks. And these heights of the crypto world in a frenzy, central banks and regulators, investors are all watching on. And Lisa, it's extraordinary to think that it was only in late 2022 Bitcoin had fallen to a low of of under $17,000.
The former chief executive of the world's largest cryptocurrency exchange, Binance, was sentenced on Tuesday to 4 months in prison.
And came as we saw crypto kings Sam Bankman-Fried, who ran the FTX exchange, and Changpeng Zhao, better known as CZ, who led Binance, being sent to prison.
Just moments ago, FTX founder Sam Bankman-Fried was sentenced to 25 years in federal prison.
They were found guilty of fraud and failing to implement proper anti-money laundering controls, respectively. In those days in 2022, only a couple of years ago, the value of the entire cryptocurrency market plummeted 70% in just 6 months. For that period, we saw an erosion of trust in the crypto space. But that also had its benefits. It helped to clean out the bad players, and things have moved on. And we've seen Bitcoin rocket up for a few other reasons. In January, the American regulators approved the arrival of Bitcoin exchange-traded funds, known as ETFs. And they can be traded just like a stock on any exchange, and that drew a lot of focus of institutional investors. Between January and September this year, $60 billion flowed into publicly traded Bitcoin ETFs. So that made it easier for everyday investors to buy cryptocurrency and drove up demand since January. And with all these stories reporting the $100,000 US milestone, it's created a real sense of FOMO. People don't want to miss out. There's a few other structural things going on here. On the supply side, it's important to remember that the supply of Bitcoin is limited by its code, and there'll never be more than 21 million Bitcoins produced, and over 94% of those have already been mined and are already in the market. A lot of this Bitcoin has been lost, funnily enough. Around 4 million Bitcoins are thought to have been lost, and there's this famous example of James Howes, who in 2013 accidentally threw his hard drive containing 8,000 Bitcoins into the rubbish tip.
Wow.
Which is currently worth $800 million and he's been digging up the tips and
I bet he has.
And sue the garbage collectors ever since to try to locate that funding. So look, there's structural reasons to support the price. There's a lot of demand reasons going on here. And the main reason over the last 6 weeks or so that Bitcoin is surging and reaching new record highs is really down to the election of Donald Trump.
So let's talk about Trump, because he made it clear all through his campaign that he was going to be a pro-crypto president. There was a run-up in prices even before he was elected. Why is Trump so pro-crypto, and what will he do in office to support the crypto industry?
It seems that nothing is immune to the Trump effect, Lisa, and his promise of deregulation during the presidential campaign has triggered absolute crypto market euphoria. And Bitcoin is 40% higher than its value just before Donald Trump was re-elected president in early November.
It's really the Trump effect.
Yeah, look, and he recognised that himself just last week. He put a post up on Truth Social, all in capital letters as his style, saying, "Congratulations, Bitcoins, $100,000. You're welcome."
Wow, okay. He's taking full credit.
He's taking credit. He knows the power he has in this space. I mean, Trump went down to a Bitcoin convention in Nashville, Tennessee in July.
Hello, Bitcoiners. Thank you very much. Hello. It's good to be with you.
And spoke to the scene down there. And he said, if crypto is going to define the future, I want it to be mined, minted, and made in the USA.
But I say this is the steel industry of 100 years ago. It really is. I think you're just in your infancy. I can see it happening.
And since being elected, that's what people are expecting that he will do. Now, Donald Trump has changed his tune on crypto. As recently as 2021, he said Bitcoin seems like a scam. But we saw this election that crypto really turned into a political force. Big players in the industry like the Winklevoss twins made millions of dollars of donations to Trump's campaign. And more than $130 million was invested by a crypto PAC into congressional races that elected 274 pro-crypto candidates to the House and 20 to the Senate, according to a group called Stand With Crypto. So this funding, as well as some input from his family, has resulted in Trump changing his mind. His 18-year-old son, Barron, he says, is a crypto fan. And Trump and his other sons, with Barron, have launched their own cryptocurrency business, World Liberty Financial, which has already started to sell a token before this project is actually launched, and it's planning something in the decentralized finance space. Trump has appointed Paul Atkins as the new SEC chair.
Today, Trump taps former SEC Commissioner Paul Atkins to lead the agency in yet another pro-crypto move.
Atkins, who served under President George W. Bush as SEC Commissioner, would be replacing outgoing chair Gary Gensler.
He's a former SEC Commissioner before the global financial crisis who was very pro-technology. And more recently, he's been running a company called Patamac Global Partners, which advises clients across the cryptocurrency industry. So basically, Trump has signalled to the market that his administration is going to be super crypto-friendly, and that in turn has led to a huge lift in demand.
James, cryptocurrency has been around for a while now, but I think there's still a lot of people who don't understand exactly what it is. Even Reserve Bank Governor Michelle Bullock said last month that she doesn't understand it. But we can't ignore it. As you just said, a single Bitcoin is equal in value to a bar of gold. We can't ignore that. So what exactly is it?
If you look at the traditional definition of money, which requires three characteristics, a store of value, a unit of account, and a medium of exchange. For now, crypto is too volatile to meet that sort of definition. And as you mentioned, Lisa, it's led people, including Michelle Bullock, the governor of the Reserve Bank, to admit,
I don't understand it. Yeah. It's not a currency, it's not money, it's being used as some sort of asset class.
They're not sure exactly what crypto's role is in the financial ecosystem.
I don't really see a role for it certainly in the Australian economy or the payment system.
So Bitcoin was invented during the global financial crisis of 2007 and 2008. That white paper was published in 2008. Now, that white paper outlined how a system to move money around the world and outside the financial system would work. The Bitcoin Genesis block, which is the first block on the blockchain, and that's basically a distributed ledger that records all of the Bitcoin transactions in succession. The very first block had a message embedded inside it, which was a reference to the front page of the Times of London on the 3rd of January 2009, which had a headline reading, "Chancellor on brink of the second bailout for banks." And that was seen as a message relating to what the technology was effectively created for. And that was to allow value to be transferred from one person to another through a phone now, or originally the internet, in a completely decentralized way. And by that, I mean none of the flawed banks who are in crisis during the GFC in the middle. No government, doesn't rely on any centralized party like a reserve bank. Effectively, just an app and a digital wallet and this new type of coin. You could send money directly to someone almost instantaneously, almost for free, and that value would be received by the recipient. So the transfers of Bitcoin are decentralized. It doesn't rely on any central party to stand over it and operate it. In the 15 years since it's been created, it's never been hacked.
Which is quite impressive, isn't it?
Well, that's built trust, Lisa, in the network itself. Now, originally, Bitcoin was about payments. In its infancy, it promised to bypass the banks and the governments by creating an independent, global, peer-to-peer money transfer system that did not require a bank account or need any traditional financial services firm, or even like a national currency like the Australian dollar to be involved. So it was sort of a form of borderless money for the internet. But more recently, and especially as we've seen this extraordinary run in value, which has spiked and fallen over the years, many people who own Bitcoin, are not wanting to pay it away. And it's becoming more of a new type of asset in which, to buy and hold and trade. But a lot of people see it as sort of like a form of digital gold.
I actually went to a Bitcoin mine in China when I was based there, and it was a big warehouse full of computers that needed a disused hydropower plant to power it because, as you said, it needs a lot of power. But the interesting thing was it was 100 metres away from an actual disused gold mine.
How bizarre.
This really is the digital gold versus the real gold. I think that's a good description of it.
Yeah, exactly. It's a new kind of asset, and some people see it as gold-like. So it's important to continue to ask what crypto is. It has a wide range of different use cases. It's different things to different people. I mean, some people are wanting to invest in it to hold it for a long time. Others are wanting to trade it for quick profits. Other people are buying different cryptocurrencies that give them different things, whether it be, a piece of art or membership of a club. So I think the jury's still out on exactly what Bitcoin will be used for in the future. It's adapting to different circumstances, and it's being used by different people for different things.
What about in Australia? How many people now own cryptocurrency here, and how big an industry is it?
Yeah, well, Australia was actually an earlier adopter. Even though our banks and our fiat currency, the Australian dollar, are very well trusted and very well regulated, there's also an interest, I think, to try alternative things and adopt new technologies in Australia. So there's more than 300 digital currency exchanges that are registered with AUSTRAC, the anti-money laundering regulator in Australia, which they're required to do. In terms of ownership, we don't have our exact numbers, but according to one of the large exchanges, SwiftX, 4.5 million Australians own crypto, and that's sort of up a little from 4.2 million in 2022 and 3.4 million in 2021. Look, we're not sure of the exact dollar amount, but the Australian registered exchanges said in September that they held 15 billion Australian dollars of crypto. Most of that was Bitcoin. Mm-hmm. Now, look, given the price rises we've seen in recent weeks, that'd be worth more than $20 billion today. Now, Australia's sort of growing enthusiasm for crypto was on show at the Australian Crypto Convention that I went to in Sydney last month.
Welcome to this year's Oz CryptoCon 2024. The foyer is packed. The energy is crazy.
The mood in this room was nothing short of euphoric.
In simple terms, how would you describe the crypto community here in Australia?
Lit. Made it go very simple.
Bitcoin had gone through 150,000 Australian dollars the day before. You had 10,000 people in this place over the course of a weekend. As you said before, there's a stereotype of the crypto bro, but there was also quite a broad cross-section of Australians there. I reckon around a third were female. There were quite a lot of older investors running, I presume, self-managed superannuation funds, a whole range of ethnic backgrounds and ages. So, I met a couple of retirees there who are keen to get involved and perhaps add Bitcoin to their SMSFs. One of the crypto exchanges reckons around $2 to $3 billion of crypto assets are already held in SMSFs. When you add that to the amount held on these retail exchanges, you get to that $20 billion figure. Look, as we head into Christmas, I think these milestones that we've seen over the last month is certainly going to become a barbecue stopper over the holiday period. And because of these headlines, it's finally landed on the radar screens of regulators and the federal government.
James, we're talking about the recent surge in Bitcoin and other cryptocurrencies that have been boosted over the past month or so by the election of Donald Trump in the US, and over the past year as it's become easier for everyday investors to buy them. As the industry does become more mainstream, it also attracts more attention from regulators. The Australian Securities and Investments Commission released its plan for regulation last week. What does it want to do, and how much impact will it have?
Yeah, that's right, Lisa. Australia's corporate regulator said last week it would consider a large chunk of the crypto industry as being involved in dealing with financial products. So promoters and exchanges are going to require an Australian financial services licence, which we call AFSLs. Now, this only landed a week ago. Lawyers and range of companies across the sector are examining this revised document. It's called Information Paper 225. To work out whether or not they're going to need an AFSL or not. Now, things like cryptocurrencies in video games and a lot of these meme coins that we've been discussing, look likely to fall outside the regime. A lot of other offerings, anything that's seeking to pay yield or feels like a sort of deposit banking-like type of product, that's going to fall inside the AFSL regime. these hundreds, sort of 300 plus crypto exchanges in Australia, they're all going to need AFSL licenses, and some might even need Australian market licenses, which will be even stricter. Now, with an AFSL comes strict obligations to act fairly and honestly, to hold insurance, to have management that are deemed fit and proper by the regulator, to have complaints handling processes and all this sort of stuff, which is quite familiar in the mainstream financial sector. Before this guidance was updated last week, ASIC had been taking lots of legal action against various companies that were operating without licenses because they'd received legal advice that they didn't need them, and several of those cases are still in the court. That approach had sort of angered a lot of developers in the space. Like, they said this enforcement by litigation approach had a stifling impact on litigation in the crypto area and was forcing a lot of developers out of Australia to go to more open-minded jurisdictions like Singapore. And ASIC now says it's making these changes to 225 to respond to this demand for more clarity about the rules.
So if the rules are in place, then they don't have to do all this litigation and developers know where they stand.
Exactly. They were trying to create the rules through court processes and get the judges in the courts to sort of tell people based on one particular case brought to them what was in and what was out. It was very, very messy. So they're trying to do the right thing by creating clarity, but there are still gaps, and this is sort of raises the question of federal legislation and what might be needed. Canberra hasn't produced a legislative bill yet. It did promise one in late 2022 after FTX collapsed, which was the Sam Bankman-Fried exchange we discussed earlier. And Financial Minister Stephen Jones promised it again in late 2023. And it looks like with a federal election due by May, things are going to be too late in terms of a bill.
So Australia, the US and Europe are all looking at tightening regulations of the cryptocurrency industry, but approaches around the world vary dramatically, from China, which banned Bitcoin, to El Salvador, which has made it legal tender. Are there winners and losers when it comes to the global take-up of crypto?
Oh, look, for sure. And cryptocurrencies, no doubt, become a geopolitical issue. Early on, Lisa, China actually dominated Bitcoin, and by 2017 hosted around 70% of all the Bitcoin mining operations, those facilities that you saw in China when you were the correspondent over there. But in 2017, sentiment in China soured, and then in 2021, it followed up by banning mining completely, declared all cryptocurrency transactions illegal, citing financial stability and concerns about fraud. I mean, interestingly, the Chinese government does hold quite a lot of Bitcoin. The numbers have been estimated at about $18 billion or so, and that's Bitcoin that's been seized relating to illicit activities. Instead, China advanced its own digital fiat currency, the digital yuan, which it launched a few years ago. And there's discussion about what that might mean for Chinese trade policy, and if it wanted to, say, require its exports to be paid for using its own digital currency, what that might mean for the supremacy of the US dollar in global trade markets. If China wants to move settlement onto blockchain systems, this all has a fair way to play out. As you said in the question, on the other end of the spectrum, you've got government like El Salvador, which made history in 2021, the same year China did its clampdown, as becoming the first country in the world to actually adopt Bitcoin as legal tender. The government also holds Bitcoin. There's about $600 million on its balance sheet, and the president of El Salvador is a big believer in crypto. He thinks that it is a way to sort of bring more El Salvadorians into the financial system. It's still not being used by many El Salvadorians who were given small initial allocations of Bitcoin a few years ago, and a lot of them sold it. It's running in parallel to its existing system for now, but is certainly an interesting experiment.
So a final question for you, James. Are the true believers right? Now that Bitcoin has gone through the $100,000 mark, will cryptocurrency become more integrated into our economies? Or is it too volatile? Is this sort of level not sustainable?
It's certainly volatile, and I think it will become more mainstream as well. We've seen Bitcoin rise and fall. So yes, it could fall again. The question is sort of what might send it lower. It's hard to see that precisely, given we're in the middle of this bull market. However, there are a few potential things. One of those is potential government control over getting fiat money in and out of Bitcoin. We saw that in China. Perhaps the election of Trump is going to make that less likely. Bitcoin is built on software that effectively is coded and created by humans. So there's always the risk that some bug could be introduced. And we've seen that in the past where it's been dealt with quite swiftly, but that's sort of said to be another risk. Perhaps the biggest risk of all comes from quantum computing. Like, it's set to just massively ramp up computing power as we know it, to the extent that it could be deployed to determine private key from public key, which are the current methods used to secure Bitcoin. And if that happened, it would break the encryption of the blockchain and break down the security. It's not an issue for Bitcoin only. I mean, credit card companies and all banking transactions are secured at the moment through encryption techniques that are in danger from quantum computing, and people trying to work out how to lift the security standards for that world. In terms of the question about whether or not the true believers are right, I mean, you just need to look at the weight of money and investment that's going into this space from mainstream banks and wealth managers across the global economy. And their investment in the space tells us that these big players think crypto is here to stay. We've seen the likes of Vanguard and BlackRock create ETF products that make it easier for their customers to buy and sell Bitcoin and other cryptocurrencies and integrate them into superannuation portfolios. We're also seeing heaps of investment banks experimenting with the underlying technology that drives Bitcoin and creating their own blockchains effectively to trade real-world financial assets. Think soft commodities, foreign currencies, and using the Bitcoin technology to create instant settlement processes that reduce costs for them. So JP Morgan and Goldman Sachs and a lot of investment banks are doing this. And that just adds a level of legitimacy to the technology itself. So as new regulation comes in to legitimize the space and as investors are egged on by the new Trump administration, it's going to be very intriguing to watch how all this plays out. Like, it's certainly been a wild ride to date. Investing in crypto is not without risks and not for the faint-hearted. But the momentum, at least at this point in time, does seem undeniable, and it feels like we've witnessed the birth, and are now watching the adolescence, perhaps, of one of the most significant inventions of the 21st century.
Thanks, James.
Thanks, Lisa.
Thank you for listening to The Fin. I'm Lisa Murray, with James Ayers reporting today. The Fin is produced by Alex Gow and Lapfan. Fiona Buffini is the executive producer. Our theme is by Alex Gow. If you like the show and want to hear more, follow us wherever you get your podcasts and consider rating and reviewing us, as it helps others find us. For more stories about markets, business and power, subscribe to The Financial Review at afr.com/subscribe. See you next week.
The Australian Financial Review.